Good evening, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update for August 18th, 2020. We've had pretty strong move and buying opportunity in the markets over the last 24 hours, and today we've seen a little bit of a slowdown to that. USDA announced yesterday its weekly crop progress and conditions estimates after the bell. Overall, the 72% total good to excellent ratio dropped from 74% last week for soybeans. Corn was seen at 79%. That was also 2% lower than last week's 81% reading, mostly because of the drop that we've seen in the conditions in Iowa. And we'll start to see reports continue to come in over the next week from this year's crop report, which, by the way, we have our very own chief market strategist, Ted Seifried, out in the market, out in the fields this year with the Pro Farmer Crop Tour as one of the official analysts collecting data. So we'll be talking with him on Thursday, sometime around 2 p.m. in our weekly strategy of the week webinar. Be sure to check out the link in the comment section below to be able to sign up and join us for that webinar every week at 2 p.m. But this week we'll be talking with Ted and some of his findings that we've seen on the road. Well, there is the 4 p.m. Central or Eastern, 3 p.m. Central bell. The New York Stock Exchange is now closed. We've been closed in the grains here for some time. We did see some flash sales today. Private exporters reported 130,000 metric tons and 195,000 metric tons of corn for delivery to China and unknown destinations, respectively. Export sales also were noted for 130,000 metric tons of soybeans for delivery to China, to unknown destinations, but assumed to China. But that is the 10th consecutive day of exports we've seen for grain markets. And last Friday was the 7th consecutive day of flash sales we saw for exports of soybeans. Wheat had a small sale yesterday. KC hard red winter wheat, it looks like 130,000 metric tons for sales yesterday. We talked about that and how all eyes are really now turning for the grain markets to this week's crop tour. So December corn, definitely impressive to now see it trade up into that 344 gap fill that we had been talking about for the last couple weeks. Unfortunately for the bulls, we did gap up from the 339 area on the chart. That leaves an open gap and the potential for an island type reversal setup. So I am a little fearful if we go down and trade down below 339 the overnight, we might slip down. Full 50% retracement from 320 lows to the 346 highs after would come in around 333 for December corn. We really, when you get down to it, we have traded back into a 50 to 61.8% area of the entire decline from 362 down to the 320 contract lows. So right back into the middle of the range for corn, but certainly in a period of price discovery higher off of the recent 320 lows for December corn. If we can push above 346, I think we do have enough momentum holding a gap fill here for a move towards 360 and a test of the high end of the range in the near term. But today taking a pause against the otherwise pretty strong uptrend we've seen for the last several trading days does bring some concern that the momentum might be slowing. So we'll keep an eye out on December corn there. Let's see if we stay above 340 here in the overnight. Want to take a look at some of the longer time frame indicators. Let's look at those moving averages. The 50-day moving average right now for December corn coming in around 337. The 100-day coming in right around 338. So we are back above both those levels. And the 100-day or the 50-day moving, or if it does start to move above the 100-day and give us a golden cross, that is, the first one of those first kind of daily indicators that trend might be turning higher. 365, call it, is 364 and 3/4 is the 200-day moving average. So that, of course, aligns back with where a 50% retracement from the 420 highs down to the 320 lows, which would give us right around 370. A 370 50% retracement would constitute a move back towards both the high end of the range we've seen for the last month of trading for December corn, as well as just a retracement to the average price over the last year's worth of price action. So watching those closely, because those could signal, at least on the daily time frame, more of a technical reason to look for short covering and maybe some of the funds finally getting out of these markets. Let's take a look now at Novi soybeans, trading at 913 half into the close. Very strong push and momentum on this move higher. You can see how our momentum indicator here is starting to show a growth pattern here over the last couple months, where each new push has been with a larger amount of momentum here on this 4-hour chart. Now we are pushing right up into the 915 to 925, call it just 920 inflection zone, where when we take a step back and look at a daily chart, we can see a cluster of lows that occurred all throughout last year that held the price of November 2020 soybeans above 920. We broke down below that level here into the start of this year, found an 830 low, and ultimately have traded in a period of price discovery back towards that broken support now and resistance. Establishing ourselves back above $9 was key. Now we have resistance at 920 that the market is ultimately testing and trying to break above, or trying to break through. Leaving this open gap down around $9, as long as we remain above that low and continue to make lower lows and higher highs on day over day, the short covering can continue. And both corn and soybeans have had a bit of a pause today, trading an inside price action for soybeans. Corn's price action, I guess I did not mention this here, but it was an outside day to the upside still, higher highs and higher lows, keeping the trend higher. But having that bit of a pause does bring some concern for the bulls. Now, if we continue to push through highs, momentum should continue and to drag us higher. Trend is your friend here, and without a break, below today's low around the 910 area for soybeans and below yesterday's 340 kind of key area for December corn, I believe the trend is still up, and we should continue to see some pressure be put on the highs and pressure to continue to make new highs. September wheat traded down for another test, the $5 mark, pretty psychological level at this point. And when you take a step back, you can clearly see wheat trading in a 480 to 560, 80-cent range that is tightened up now to 550 to $5 and down into a 50-cent range. We saw about a 20-cent rally off of those lows, right up into 50% retracements. Of course, was a retest of the prior. Really, if you want to get down to it, this is kind of what soybeans are doing too, just on a different time frame. Wheat's doing it on an hourly or 4-hour time frame. Soybeans are doing it in a daily time frame. The 520 area is like that 920 area in Novi beans. 520 here in September corn is the levels we broke down below in late August. They were the levels we were holding above in July. We broke down in August, or early August. It's mid-August now. And have seen a period of price discovery higher off of that low that formed to simply retest that broken support now as resistance. You can see wheat fell off, went back down to test now a supportive area. If it continues to hold above $5 and we get a push up towards 525, I would say that wheat is then trying to reestablish itself in the 520 to 550 area, and then above 540 to 550, we can talk about a more sustained and longer term breakout of a much larger sideways trend that has been going on for wheat. August live cattle. Actually, before we go too far ahead here, let's flip back over to November soybeans real quick. Let's take a look. The 200-day moving average right at 902. So we've started to push above that area. We already had a bullish golden cross with the 50-day moving average trading at 886 and the 100-day moving average at 871. Both the 100-day and the 50-day have turned higher with the golden cross in the November soybeans. And we'd be looking for price to now really stay above that 200-day moving average, which, if we go back and for a moment and look at the look at the technical chart, you can see a trend line here against the highs, this yellow dotted line. That could also be, constituted as the same supportive, or once was resistance line, now supportive line alongside that 200-day moving average. Let's take a look now at our live cattle, bringing up the August live cattle here, trading at 106.82 half. We're going to be moving in and starting to look at October and December here, but much to the same effect. October live cattle 113 open gap above us here, looking for the market to continue its period of this trend higher, where we're holding trend line support now around 107.50. But a period that should take us towards 113 and maybe even a fill towards that 117 open gap left from January earlier this year. So still an uptrend for the live cattle, starting to establish itself above this 106 to 104 inflection zone that we found resistance in March and through the COVID collapse. Now starting to break above those levels. I'm looking for gap fills again around 113 and 116 respectively. Support would very likely be around 107.50 to 108 right now in that October live cattle. And last but not least here today, October hogs. The 46 to 48 area since March has been a very, very large supportive inflection zone. Range highs have now tapered down to 55 area to the upside. We're really in the middle of that range at 51. Again, a break above 54 to 55, and again, the highs for August at 54.20, I believe would constitute a range break. We start to look at the 56 to 62 range, the next 6 cents higher, and ultimately, I'd like to see at some point in time an attempt to get back to the 68 and 73 gap fills that we have above. But we are a long ways off from that. However, a move above 55 could target up towards that area if we start to get a move to fill some gaps that are left open. So with all that being said, we're going to keep our eyes and ears open to see some of those reports coming back from Iowa and across the Midwest, see how this crop tour is starting to fare out. We've got export sales numbers due out on Thursday. And other than that, everybody, do join us and check out the link in the comment section below to join us and sign up for that weekly webinar we've got going on, where we'll be talking with our chief market strategist, Ted Seifried, about some of his findings on this year's crop tour. Have a great day, everybody. Can always be reached here at 312-277-0110 to discuss all your trading and marketing needs. Find me on Twitter or on Facebook, or shoot me an email at zaner.com. That being said, have a great day, everybody. We'll be back with you all tomorrow as price action develops. Take care, everyone.